Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Wednesday, June 15th. Stocks on Wall Street are giving back most of yesterday's big gains, following disappointing data on inflation and manufacturing. Consumer prices rose 0.2% last month. That was half the size of April's increase, and the smallest gain in 6 months. But economists had been expecting a flat reading. The price of food, clothing, and autos all accelerated in May, offsetting the first drop in energy costs in nearly a year. Excluding the volatile energy and food sectors, the so-called core CPI jumped by 0.3%, the most in nearly 3 years. And on a year-over-year basis, prices at the retail level rose 3.6%, the biggest gain since October of 2008. That yearly increase was largely driven by higher food and energy prices, which have cut into consumer spending and economic growth this year.
Another weak spot for the economy seems to be industrial activity, at least in the New York region. The Empire State Manufacturing Survey fell nearly 20 points this month, into negative territory for the first time since last November. Economists had been expecting the index to rise from May's relatively weak level. The reading is raising concerns that the recent slowdown in manufacturing may be more than a temporary soft patch. Meanwhile, a separate report showed that industrial production edged up by 0.1% in May. That was slightly below forecasts. And the percentage of the nation's factory capacity being used held steady, just below 77%. The numbers were held back by weakness in auto manufacturing and utilities.
The European economy is also in focus today after Eurozone officials failed to make progress on a new financial rescue package for Greece. Germany has been pushing for private bondholders to contribute to the bailout, but ECB President Jean-Claude Trichet has spoken out against that plan, saying any form of debt restructuring could be perceived by the markets and the rating agencies as a default. Meanwhile, Greek workers are staging a national strike, protesting a new wave of austerity measures required for the country to continue receiving aid from the European Union and the International Monetary Fund. All this uncertainty is pushing the cost of insuring Greek debt against default to an all-time high, and it's weighing on the euro, which is falling sharply against the US dollar. The dollar's strength, in turn, is driving down commodities prices. Crude oil is dropping back near $98 a barrel amid concerns that slowing global economy will cut into demand.
Let's finish up with a couple stock movers. Keep an eye on shares of Pandora Media today. The internet radio company debuted on the New York Stock Exchange under the ticker symbol P. Pandora priced its IPO at $16 a share, well above its recently raised target price of $10 to $12. Meanwhile, Bank of America is losing nearly 2% in early trading. The Financial Times reported that the Securities and Exchange Commission is investigating its Merrill Lynch unit. Regulators reportedly are looking into whether Merrill mispriced assets for a sale it structured for the hedge fund Magnetar. That's the latest from Weiss Research. Have a great trading day.